Joining us is Keith Lerner, Co-Chief Investment Officer at Truist Wealth. Keith, it was a good, timely call. Now you say much of the excess appears to be wrung out and investor expectations have reset lower. So explain to me why you believe that's the case and what that means.
Thank you, David and Morgan. So as you mentioned, we had been actually positive with tech with an upgrade last November. It moved up about 40% into June. And when we got into June, that last move was very speculative. We had the strongest one-month outperformance of the S&P that we've seen since 2002. So that's one of the reasons why we downgraded, even though we thought the secular trends were still in place. So now you fast forward, we just upgraded the sector. We've seen the almost complete opposite. The one-month underperformance relative to the S&P is the worst that we've seen since 2002. At the same time, as we look at this correction, as the technology sector is pulled back, earning trends continue to make 52-week highs. And then as we look forward and we get past August and we look into the fall, we think there will be more attention back on the AI cycle with Apple's iPhone coming out, and then eventually a PC cycle as well. And then lastly, if we are in a cooling economy, we think in a cooling economy that investors will rotate back into tech to take advantage of that premium growth.
All right, but I want to understand what the word excess means, why it was excess prior to your saying, all right, maybe lighten up, and why there is that excess that's been run out. What do you mean when you talk about it? Is it just multiple? What are you talking about? Yeah, no, it's a fair question. We think about it like a rubber band. And I mentioned prior to, in June when we downgraded, the rubber band became very stretched. So to me, when I say excess, it became excess complacency. The last move into June, the last ramp up was all multiple expansion. So what I mean now is now we're back. We talked about the Mag 7 just a minute ago, you and Dom did. The multiple for the Mag 7 went up to 34. Now it's pulled back to 38. So another way to think about this is 28. Yeah, sorry.
28, yes, correct. Yeah, 28. So another way to think about that is markets are all about expectations and how things come in relative to expectations. The bar was too high before. That's why even though we had decent earnings this earnings season, tech sold off. Now that bar for positive surprises has been reset lower, and I think that's a positive.
So here's what's interesting to me, Keith. We started the week with people worrying that recession risk had risen, and yet the top three performing sectors this week are all cyclical: in industrials, financials, energy. Energy, yeah, I realize we've got some geopolitical stuff going on. We've got some better data out of China, so maybe that's helping push that sector higher anyway. But why would those sectors be the ones that are outperforming if the economy is slowing?
Well, I think at least this week we had some positive economic data relative to kind of depressed expectations. Again, going to expectations, the initial jobless claims is what really sparked the rally yesterday. And if all of a sudden you're thinking you're going into recession and then you're not so sure, and maybe it's a soft landing, then the market rotated back into these kind of cyclical areas of the market. So I think that's healthy. You're also seeing decent earnings from some of these areas. But ultimately, we do think the economy is cooling, and some of these other areas will likely, hang in there. But we still think as we move later into this year that investors will rotate back into tech.
Finally, we talk about tech as though it's monolithic. I mean, it's huge. So when you say tech, what are you really thinking about here?
Well, I mean, for what I do, we're looking at 50,000 feet in the clouds, right? So I'm looking at the sector overall. I would say, though, if you're positive on tech, you almost, by definition, have to be positive on semiconductors, right? And also some of the hyperscalers as well. So I think both of those areas, maybe a little bit less on the software side. But more generally, we like the sector, and we let the stock pick into our equity team.